Good morning. Welcome to me on the SEAF model. I'm Jack Kosar. This is effective for the week of October 20th, 2025. Let's get started. SEAF signals for this week. We retain utilities and technology, and we add in communication services. Communication services coming in on 2 on the trading week, pushing up with a little bit weaker of a tactical month. A little bit higher scores. Again, just highlighting here for those of you who may not know the rules or can't remember them, or are wondering why communication services is picked over real estate or healthcare, despite the fact that they're all ranked 13. And the way that it works for the SEAF model is if we have the same ranking overall scores, we default to the trading week as the next filter option. As it's the newest the money that's coming in. So while real estate and healthcare was a signal last week, are all 13s, we will retain communication services here for that 2 on the trading week. Technology takes a little bit of a break on the trading week, but still showing strong tactical month and strategic quarter, but a little bit higher score. And utilities takes over as our leader. Energy remains here at the bottom with its friend financials. Heading into our heat map, as you can see here, a little bit of strength out of utilities with the top green. Overall, a little bit of green at the top, with our mixtures of tech and communication services having some red, but overall aligned evenly. As you can see here, we went green all the way up through 6. I think 6 in terms of the ranking for the trading week. These were on very light flows, under 0.1% for everything outside of even communication services was 0.8. So 0.31 for utilities, which is close to that 0.4 rank. So a little bit of a significant move here in utilities, but otherwise light flows 2 through 6. Very, very close to 0. Technology with an outflow of negative 0.2, which is second worst on the week, only second to energy. And then seeing a little bit of life out of consumer discretionary and real estate. But again, these were light flows on the trading week. So while we're seeing a little bit of a positive range from 6 to 4 to 3 and from 9 to 4 here. Again, a reminder, these are a little bit light flows. Overall, positive increase in all 11 sector spiders of 1.69% in terms of asset inflow. And for the last 5 days for last week, we're up, even with the volatility inflows in overall. That brings us to our sector TNA total AUM. Again, for those of you that are new or haven't seen this before, up here I add up the 11 sector spiders AUMs and for one aggregate number. And on the bottom here we have SPY. I put SPY down here just because I really do think there's a little bit of reaction going on with a little signal here in terms of this total AUM number and the broader S&P 500. As you can see here, we've largely been above this 21-day moving average. Little brief interludes, kind of check in as minor bottoms, very minor bottoms here for the S&P 500. We did drop below last week, below that 21-day moving average, and we've been a bit sideways. This does not include today's data, and we are up 1.5. S&P is up 1.15% on the day. So this does not include the data for today, but just a bit of an inflection point as we're navigating that 21-day moving average in terms of the asset flows. We're not out of Dodge yet, but a significant move off this 21-day moving average up could indicate positive momentum or resumption and upward trend for the S&P 500. Now headed into our rainbow charts. We're going to start with energy this week. Energy remains low. I like to bring up energy because we keep seeing these little spurts of relative outperformance along with rapid inflows and then subsequent outflows of money. Energy continues to kind of continue this pattern, and now we're sitting in that deep void, which is at at least a year low for the relative underperformance versus SPY, which is in a though jagged downtrend. Technology. Technology took a little bit of a breather here, with the trading week. We'll see if it resumes to its glory coming this upcoming week. It is still a SEAF signal. We do tend to see this at the end, or when we're on these longer runs in terms of relative outperformance, that we do get a little bit of breaks. Here, this one did not pull us out of a SEAF signal. It's still in favored, and we're a bit sideways here. So nice little run up, relative outperformance versus SPY. It'll be interesting to see how we navigate this. Again, we're not projecting cash flows. We're just tracking the momentum of those flows as they come into the 11 sector spiders. A little bit of a pullback on tech, but nothing to worry about here in this broader, longer trend. So we'll see what this week provides us for technology. Utilities. Utilities takes the lead in the SEAF model, and it's kind of up and away in that upper favored, and we've seen it here in this relative outperformance versus SPY since we pushed out from a void, this transition up, and then kind of shot us up into this upper favored, seeing some nice relative outperformance versus SPY, broke through this resistance point on the relative performance versus SPY part of the chart. So we are navigating now the relative performance mark of late May, early June. So we'll see how we kind of curtail through there, but right now this is the most favored and has the strongest inflows on the trading week, and then second in both tactical month and strategic quarter. Communication services, again, brought in via its trading week with the 2, but these were also on light flows. The third position in the SEAF model oftentimes is trying to catch things a little bit early. So, obviously we moved off this neutral up into favored. We will see what happens here on the relative performance side of the chart. Much stronger flows are going to need to come in, but just seeing that positive momentum in the communication services on the SEAF score side, have yet to really materialize on the relative performance side, but it's early. Now, also note, communication services has been much of a sideways versus its relative performance versus SPY going back to really this entire year. So, we'll be interested to see if communication services could get itself up into that upper favored. If not, we'll move back to neutral, and we continue to see this more of a sideways pattern for the relative performance. This is a SEAF signal. And then real estate. I wanted to bring up real estate just because I do like to see this pattern in real estate. Here we go from 6 to 4 to 3. This is slightly reddish yellow, all the way yellow, and then green. Now, again, this is on light flows for real estate, and really haven't seen any accumulation, but it is something that I like to look at as we kind of start to cross into the up favored. If we can kind of maintain this level, we saw a little bit of this in March. And March to April, we had a nice little upswing in the real estate market as that correlated with us sitting in that lower favored upper neutral area. Currently sitting in that area, we can see got a little bit of a turn up after a bit of a slide in the relative performance versus SPY. Not a SEAF signal, but just an area to keep our eyes on. If we can get ourselves pushed up into that mid favored here with real estate, which hasn't happened since late April, just something to keep an eye on. Like I said, I like that pattern, and I do like to see when things are starting to kind of climb up into that early favored territory. A good strong week next week could push this thing up into upper favored, and we could start to see a little bit more of that relative outperformance versus SPY. That is all I have for you this week. I look forward to breaking down the SEAF model with y'all next week, and thank you.